Welcome to the Dealmaker Show, the #1 place for entrepreneurs and dealmakers to learn about leveraging and generating status, frame control, and narrative power to close big deals. Here is your host, investment banker, deal-making expert, and best-selling author of Pitch Anything and Flip the Script, Mr. Oren Klaff.
Hey, I'm Oren Klaff, and this is the Dealmaker podcast. I'm on with Brendan Cahill, the CEO and president of Excellon Resources. Brendan, did I get that all right?
You got it right. Thanks, Oren. Great to be here
Thank God.
today.
The introductions are so important because otherwise somebody's mad at me the entire broadcast. So listen, we have these wonderful PR people, and this is the Dealmaker podcast. And many times they'll bring me, this is Mary Smith. She's the CEO of a company that knits blankets for old people. and I got to figure out, what do I do with this? But I look at you and Excellon, and I take one look at it, and I feel like we've lived in parallel resources. Like all you do is deal making. You don't sell stacks of paper. You don't sell SaaS software. You don't have trained, salespeople are out door knocking and have little pitches. Like you do deals. So I was really looking forward to talking to you about the deal-making universe that you live in. And so not only are you doing deal-making like a real estate guy would do or venture capital or private equity, but you're doing it in sort of the most high-stakes industry, which is mining. So you have uncertainty, you have deal-making, there's a lot of money involved. It's not, it's unpredictable. There's wins and losses. There's massive competitors. Like, why in the world do you're like an MMA fighter, right?
That's
or a junior league hockey player. Why in the world did you sign up for this challenge?
I'm more like Mike Tyson's sparring partner. It's like, what an idiot. Like all of us in this industry. But I mean, that's the fascinating thing about it, right? I think that's what, draws a certain kind of person and why people get into the mining industry and the exploration industry and they just never leave, right? Because the buzz is just different than anywhere else, and you think of the sweep of history, and that's what we're really caught up on, right? And, the Romans expanded looking for gold, the Spanish expanded looking for silver, and we're kind of still doing that. We're right on the cusp of economy, the cusp of civilization, really. And you go to some crazy places when you're doing that. It's a lot of fun.
So this is what I love about you. And again, I always wonder, like, there's these 3-hour podcasts, and I go, why would any podcast need to be longer than 20 minutes? I do not have 20 minutes. But then you meet someone like Brendan, you go, I need 3 hours. But here's where my mind goes. Like, if you sell SaaS software, no disregard to you. We buy a lot. We sell a lot of our companies. If you have med tech device, you're helping people. But you aren't in, most of the industries that we intersect with, you're not in the arc of history.
Yeah,
as you are.
Yeah.
And so just tell us a little bit about the business so we could get some perspective on just, as you said, you go to these places, you do these deals, you're thinking about economy and global scale economics, and just give us a window into your world, because I'm fascinated.
Well, I'll go even crazier than that. Like, I was thinking about this today, right? And like, Bitcoin versus gold and all the buzz over Bitcoin and everything. But like, our industry is actually elemental, right? What we sell are the very elements of the earth. And those come from supernovas, right? They don't come from computers. Gold comes from a supernova. We try to find that. So we don't have control over the price that we sell it at. All we can do is try to extract it in as efficient a way as possible. So you have to go to places that nobody else goes to. You have to work in very difficult areas, and you become a critical part of the communities that you work in. And through my career, I've gone from major boardroom deals, working with Barrick, a junior lawyer at the time. I'm one of their advisors on the biggest M&A deal in Canada at the time, all the way through to negotiating land acquisitions in West Africa with farmers and people who are trying to build up their communities. And that's right on the edge of kind of society.
Let me jump in there. Let me jump in there, because no great story starts with we landed in Zurich and decided to have a salad.
Yeah.
right?
Yeah.
In Switzerland. So tell us about somewhere you've been that is just off the grid, and you wouldn't, reasonably want to go there unless A, it was your job, B, the stakes were high, C, the economic opportunity was high.
Yeah. I mean, everywhere I go, I enjoy, right? So like, and there's tough places to go, right? Ghana,
Like Baltimore. Yeah.
yeah, Dulles Airport. That was enough for me. But you go to a place like Ghana, right? It's in West Africa, like tons of malaria there, right? But the most beautiful people you could ever imagine. They're just the most genuine, beautiful people, right? And it's a place that is surrounded by countries that had serious strife for years, and you have Ghana, this gem of a country, right? But massive amounts of malaria. The food, with all due respect, is not the best, right? But you push through, and you go into the communities, and you meet people, and I think that's the story, everywhere I've been. Sierra Leone, another tough country, right? But beautiful people, and you find the best part of it. And like that's the difference, I think, a little bit of the difference in mining is that we go there and we love the countries and we love the cultures if we're going to be successful, right? So there's some tough spots. You go up 5,000 meters in Peru, it's the breathing's tricky, right? But it's an extraordinary place to go. And so many times I've been like, I can't believe this is on work hours right now. Most people would be spending God knows how much to do a tour.
Okay, well, hold on. Again, that's why I said it, but this like my 7-year-old comes home. I go, how was school today? He goes, yeah, it was good. I'm like, good what? He's like, yeah, it was fun. We had math and reading. Yeah, but what did you do? Oh, nothing. So I can't let somebody off the hook and go, I went to Sierra Leone. I went to Ghana, and, it was fun. The food wasn't that great.
Yeah,
but so you land in Ghana.
Yeah.
Right.
Yeah. So Ghana, that's an amazing story. How we got there. And it's kind of, I was working with a company called Palangio at the time. It was before I was at Excellon, and Ingrid Hibbard was the CEO who had done an incredible deal with a company called Detour Gold, which is now Canada's largest gold mine. And kind of during the time of nurturing that asset into a transaction, which ended up resulting in something like 11,000% returns for shareholders, she had the opportunity to pick up this ground right beside one of the largest gold mines in the world, Obuasi, in the middle of Ghana, right? And it was a complete about turn. She was in Northern Ontario, but saw the opportunity to pick up this huge 300 square kilometer land package right beside this massive mine. So that's how the company got into Ghana. And then tricky exploration. So then we started looking for other assets in the country as well, and ended up coming across this mine right down from this project right down from a mine called Ahafo that nobody could work. The communities didn't like the way that people worked in that ground. And so we went in there, we negotiated with the local landowners, ended up doing a very good deal, which was good for them and good for us. Then sat down, had tea with the local people, described what we were doing. We had good Ghanaian partners in it as well. And we managed to get drills on the ground where nobody else could, and ended up making discovery after discovery after discovery. And like that's the key part of what we do, this exploration and discovering new gold deposits. That's your R&D. That's how you invent the thing that you sell, eventually produce and then sell it.
Okay, so this is fucking amazing at 19 different levels. And I just want to drill down a little bit, no pun intended, mining oil and gas. So, okay, how in the United States, in Canada, due diligence, the part of doing a deal in which you are determining if what you're being told you're going to get, you're actually going to get, is very straightforward. I mean, I hired a law firm today that I met yesterday to do due diligence on a $10 million deal, and I'm completely comfortable because this is stamping out beer can work for a law firm and an accounting firm, right? There's GAAP, there's standards, there's legal standards. The law firm doesn't want to lose their life. Like due diligence is very straightforward. How is due diligence different once you step outside of Europe, United States, and Canada, and maybe, Mexico?
Yeah, that's when you're looking at an asset globally like that, and especially in some of these countries, you really kind of have to go through this hierarchy of kind of needs or qualifications to be there at all. The first thing is the rock there, right? If the rock is there, the product's not there, there's no point going there at all. That's the key
But
thing.
go above that, like title, right? Before you get to the
That
rock.
actually comes
Oh,
after the rock, because if
it's,
the rock isn't there, if the
I got
geology
it.
isn't there,
So,
it doesn't matter about the title,
so,
right?
so we've all seen the movies, right? Where the guy brings the cocaine, right? He puts it on the table, and the guy, everybody's got shotguns, and AR-15s, and then the little sciencey German-looking guy takes out the heroin testing kit,
Yeah.
right, to see if it's pure. So that's the stage we're at, is testing if the heroin is pure.
Yeah, but it's kind of like on a bigger theme, like is the rock there, right? And then you get into like,
Yeah.
how many AK-47s do you need to actually see the rock, right?
Yeah.
If you need too many, you might want to think about going there, right? And then it's, is the government supportive of mining? Is the jurisdiction supportive? Is the rule of law there? And then you get more down into the title itself. Do you actually have title to what the other person is selling, or do they have title to it? And then you get to, this environmental issues. Was there any historical mining that creates an environmental issues? And then after that, you have all the regulators.
I'm sorry interrupting you. It's just because you're going fast over things that I think is fascinating. And I don't want to just breeze by stuff I know you do this every day, but I'm putting my third eye blind on it. And so for all you little guys out there in SaaS companies and doing e-commerce and going, hey, what Starbucks should we meet at in Palo Alto? Right? Brendan has to go, how many AR-15s do we need to bring to this meeting?
I try to avoid that as much as possible.
Okay.
But I mean, that's why, some companies will take huge risks, right? And with those huge risks, you can get some amazing rock, right? But you may never be able to get at it. We try to, with my companies at least, try to avoid that as much as possible.
So is part of it just showing up? Is that an advantage, or is that just showing up somewhere that's hard to get to? Potentially, it's got a State Department report. Don't go there unless you're Stevie Wonder. The State Department, this is an area that's in turmoil. The State Department recommends you travel on your own volition, and don't call us if you get into trouble. And just the travel. I've been to Africa many times. Just the travel to get there is expensive, and so is part of this just showing up in a far-flung place, or do you go there and there's 17 other guys from Toronto running around with mass spectrometers?
Yeah. I mean, Canadians will go anywhere, right? And you've got Canadians, Australians, Americans, some amazing American geologists as well, South Africans, and just not afraid to go to crazy places, right? So there's definite competition. So just showing up doesn't quite work. And then as well, like it's the relationships you build in the country, because one of the problems in our industry is those first relationships, right, end up causing massive problems 5, 10, 15, 20 years later, right? So it's really about being, true from the start, and never bending from that, right? Otherwise, those problems will catch up to you, and they always do.
How is forming a relationship in quote unquote far-flung places, right? Rule of law is more in question. Business norms that we're accustomed to is more in question. GAAP, legal compliance, due diligence are all sort of cybertronic wormholes that you really have to pay attention to. How is deal making fundamentally different when you remove yourself from the standards and the norms that we're familiar with?
Yeah, I kind of, before I really got into the industry, I spent a lot of time in India and Southeast Asia, traveling around and buying this or buying that. And it was with a buddy of mine who's just a great wheeler dealer. He's up in Calgary now. And we spent so much time, arguing over the price of things, right? And I remember one time I'm like, dude, you're arguing over 15 cents for a trocho right now. That's crazy. He's like, okay, I've taken it a bit too far, right? But like, or in India, stacks of carpets, right? And I remember spending 3 days once negotiating over a very expensive shawl up in Kashmir, right? And eventually, I broke the guy down. I mean, this wasn't cheap. It was like a $200 shawl, right? But I bargained it down from like a crazy $10,000 or something that he wanted, right? It was so outlandish. And I think at the end of the day, like that's deal making. So everybody bargains, right? And it doesn't matter whether you're doing a $10 billion deal or buying a shawl, right? It's just about my price versus your price and getting to something that's going to work for both of you, hopefully, and maybe you win a little bit as well.
This is something I have always felt to be true, and I'd like to validate it against. Well, first of all, I feel like everyone else that I've ever talked to who has been to the places you've been deal making in the kind of ways you've been deal making, and has the life experiences and travel that you have, has like tattoos on their neck, long hair, wearing Patagonia outfits with Birkenstocks, and is drinking a beer at 8 a.m. So it's great. It's very interesting to just see someone with your travel and life experiences actually running a company. So that's fantastic. Most of the people running a company never leave the front door of Washington or Los Angeles or Palo Alto, and these are all internet experiences that you guys are actually going. So I think that is that's fantastic. That I have always felt, and people ask me all the time, that in deal making.
Just one point on that, right? And I think it's one of the beauties of the industry we're in is like place and the physical aspect of things is so utterly fundamentally important, right? And I love technology and all these advancements that are pure creations of the mind. But at the end of the day, we're physical beings. And to be actually the place and thing being so important is a bit different than a lot of the experiences we get these days. And I think very special as well.
I feel like this podcast just ended on a high note. I mean, we're going to keep going, but if you have something else to do, go do it, because that is, I mean, people will come to me and they say, yeah, I met with Kleiner Perkins, to try and get $10 million into my crappy SaaS CRM Marcom startup. And I said, well, tell me a little bit about it. And they go, well, yeah, we were at the Starbucks, in downtown Palo Alto. And look, motherfucker, you don't meet somebody to discuss your destiny in a Starbucks with the tiny little, kid stools near that you use the handicap table, with the noise and the music playing. And that is not the physical location that determines the outcome of you need to go into these environments, the belly of the beast. When Bill Gates went to do the fundamental deal that created Microsoft, he went to IBM, the belly of the beast. He didn't say, meet me at Starbucks. There wasn't any then, thank God. But you're going, I mean, I think that the thing I'm keen that's triggered me that what you're saying is you're going to the physical places where the deals are, and they are hard to get to. They're potentially dangerous. You're not comfortable. The language isn't innate to you. It's a different deal making environment, but you have to go there physically to be, surrounded by, embedded in, and immersed in the culture of the people you're doing deals with. And I think that is, even if you're in Toronto and you're doing a deal in Toronto, that applies. Zoom, Starbucks, phone. You got to look in the white, the Braveheart, right? You need to look in the whites of the eyes of, the people that you're working with if you want the LOI or the deal to stick. So I go back to relationships, right? You get there. How do you form these relationships in a different culture?
Yeah, that's the tricky thing, but it's almost you always know somebody everywhere you go, right? Yeah. It's just about reaching out, and whether it's Facebook or LinkedIn or whatever, or somebody that you knew from 20 years ago, right? Just you work through the network and you realize this goes to that, and then you eventually get the tenuous grip on a place, right? And then you can slowly build up your relationships better over time. But it's really, there's always a connection for sure.
Is one way in these places, and probably difficult to say this on film, but that you build relationships is with a duffel bag, with a red X on it, left under the bridge on K Street. Do you have, is there a price of admission? So, if this was a nightclub, is there a cover cost to get into this club?
I mean, I think the thing is, there's always, anywhere you go, K Street or wherever, right? That's a route that some people take, but that's the slippery slope that always ends up like once a hand is out and you fill it, there'll always be hands out, right? And our approach is the opposite. Where there's a hand out, we just go ask somebody else and somebody else and somebody else, and eventually there's one hand out, and everybody's like, "Dude, why's your hand out?" And like I found, when you do face these situations in any business, right, and you just refuse ever to succumb to it, because you're done if you do, right? And it's just got to be a fundamental part of the business.
And I feel like the discussion just ended for a second time right here. This is, if you want control in a deal, this is how you get it, with boundaries on your value system or your morality. Once somebody knows what your boundaries are, I feel that establishes a moral authority that then you can use, and you can push somebody back. Right. And it is, I think, in deal making, because it's not sales, right? In sales, you have a rate card and a sell sheet and a price and a discount, ability to discount, and maybe, way to finagle. But in deal making, it's largely internal. And so the thing we just talked about is, hey, if there is something that is a bribe or outside of our value system, it's really your ability to look in the mirror and say, I have met the enemy and he is I. It's not somebody else who's going to tank your deal. It's you. A lot of it is internal self-control. Does that mean anything to you, or you don't think in those terms?
No, that's exactly it. But it's really that the nexus of like those two people who are negotiating, right? And I always try to like step inside the other person's shoes and say, what do they really want, right? Because I mean, we were doing this deal in Germany back in 2019, right? And we knew like what was really important to the other guy, and that he could only go so far in bending on, right? And a lot of people would have just walked and said, that's too much to ask, right? But we just said, that's what he really wants in the whole context of the deal, what's important to us. And then we got the deal done, right? The thing is, in my view, like if somebody looks inside of you, steps in your shoes, and realize you'll do anything, you'll do anything to get the deal done, then your ethics are pushing on a string, right? And you stand for nothing, you'll do anything. So how can they sign a piece of paper and trust you afterwards as well, right? So you actually undermine the entire transaction and your ongoing relationship by doing that up front. If he's a good guy, he won't trust you. If he's a bad guy, he'll come back for more.
Listen, I think this is, ultimately we've arrived somewhere that for me is everywhere. And you can tell that Brendan is a very experienced deal maker just from this. I'm talking about you in the third person, as if you weren't
here. As long as I don't,
Brendan,
that's fine.
He's a great guy. Sorry to see him go so suddenly. I really liked him. The notion that deal making for junior deal makers or people who, are in low stakes deals generally, which I would call sales, there's this feeling that the deal making is external. But really most of it is internal. Mm-hmm. What am I able to do? What am I willing to do? What do I stand for? What do I believe in? And how do I go home and look at my family and look at myself and say, I might not got everything I wanted, but I did what I believe in.
Yeah.
And so when that is anchored within you, now you are able to deal with the external environment because people have a sense you aren't needy. They can't just keep asking for stuff. They can't walk you up to the line of doing a deal, right? And then ask for more at the last minute without consequences. Yeah. And you can't get, you can't create consequences outside unless there's consequences inside. You can't hold anybody else accountable unless you hold yourself accountable. And deal making really starts with this internal strength. Can we pause for a second? I think we hit some huge high points. Tell us about the company. We talked a little bit about silver, the importance of silver, what the company, I think we're at a point where you can pitch us the company.
tell us a little bit about
credibility. Yeah.
Yeah. So I'm CEO of Excellon Resources, which is NYSE listed, NYSE American under the symbol EXN. And we're a silver producer in Mexico in the state of Durango. We've been operating for 16 years now, so a long history of production. We're also an acquirer and an explorer. And in 2020, we kind of increased our asset base by about 15 times. Despite the pandemic and everything, our net asset value went from 50 million to 170 million. We did two deals, one bringing in a high quality silver project in Saxony, Germany, and the other one acquiring a gold project in Idaho called Kilgore when we acquired Otis Gold. And that was an interesting transaction, just really about timing, about being in the right part of the cycle and acquiring a very good asset for a very good price. Only 22 million Canadian project that has an NPV right now of over $300 million US. So that's our focus, produce, develop, explore, keep on growing our resources and keep being exposed at the right point in this, commodity cycle that we're in right now.
Why silver? What does silver have to do with anything?
Yeah, well, there's two aspects. And the first is gold as a precious metal, right? It's the store of value for 5,000 years plus now. Bitcoin is taking some of the shine away, perhaps. But when you look at its importance over time as a backing for monetary systems, it's just inarguable. Silver kind of gets some of the play off gold. It's a cheaper form, but historically silver was trading at a ratio of about 15 ounces to 1. It's currently trading at 65 to 1, but it's only produced at 8 to 1, right? So there's a real market disconnect there. There's a real trade there, and despite being deal makers, at the end of the day, miners and explorers are traders, right? Because our market, we can't invent a better element. We can't invent a better gold or silver. We're not making shoes here, right?
Version 3.1 now with AI and machine learning, upgrade for $19.99.
My gold's way better than your gold. That guy's silver, not so good, right? So it really is a bit about understanding where you are in the cycle. And right now we're in a period where governments are printing money. There's a lot of talk in inflation now, increasingly so. I have my own thoughts on whether we're in a deflationary or inflationary environment. I think the thing is we're in an environment of change. And in periods of change, precious metals, these stores of value, are what you're looking for. So silver, was the foundation of the German monetary system until 1873. The U.S. system well into the 20th century. So it is a critical monetary metal, but now also with these very important industrial uses. And it's hard to talk about solar cells being in industry because they are this foundation's critical element of the green revolution. And without silver, you can't have solar panels. That's what kind of carries the electricity from the cells to the copper and then into the grid. Electric cars, same thing. We can go through the list of technologies that use it. But silver is really interesting because it both rides on the back of gold, has this interesting disconnect in value, and then also has tremendous industrial uses, which, just really, when you've got investment demand and physical and industrial demand clashing, you've got the setting for a very interesting trade. And I think that's what we're in the midst of right now. And
so interesting. Are you guys on the line of sin, tobacco, alcohol, mining, my little boy, I mention this all the time, races go-karts, and the go-kart is not electric. Electric go-kart. By the way, I don't know why they call them go-karts. These things. So, in Europe they have Formula 4, Formula 3, Formula 2, Formula 1. This is Formula 5.
Yeah.
Fucking car goes 70 miles an hour with a 7-year-old in it. Right? He's going around the corner. He can't even hold the G's. He can't hold his little head up. This is full on wheel to wheel racing. But anyway, it's 2-stroke. These are 2 strokes. Blue smoke going up. And there's not a lot of them, but it is the activity of sin. So is this how is this viewed in terms of green, not green? Do you have enemies? Do you have lobbyists? Do you have Greenpeace? Or who are the guys that Sea Shepherd? Is Sea Shepherd? Sea Shepherd waiting outside your door with spear guns in the morning? what is the environment you live in from the business that you're in of mining the earth?
Yeah, I mean, we've got everybody coming at us, right? And I think it's like what we were talking about earlier, right? It's that the nature of place. The mine is where the mine is. You can't move it. That's where it was formed, right?
Yeah.
So we're sitting ducks, right? And you do have a lot of special interests that are like, those guys can't go anywhere, right? We can make a lot of money off of creating a cause against them. And I've learned a lot about the NGO business, and there's good NGOs, there's bad, like there's the good ethos, but sometimes the business is a bit dirty.
Yeah.
But the mining business, I mean, like, again, like right out on the frontiers, going up in the hills, trying to find gold, trying to find silver, trying to find copper. It was difficult business, and technology had a long time getting into it. And certainly, through the first half of the 20th century, there were disasters, there were crises, things weren't done properly. But the transformation of the industry since has been pretty extraordinary, and in part because of the efforts of these NGOs to improve the way that people do things. But now, with all the advances the industry has made, and I would say we're definitely trailing the oil industry in terms of the technology applied, but we need more technology applied to exploration and extraction. But now, how are you going to electrify the world without copper? How are you going to have solar panels without silver? So we're at this interesting point where, look, if you want to combat climate change, if you want to have a green economy, you need these metals. You fundamentally need these metals. So it can't be do not mine at any cost. It's got to be, how do you mine, as ethically as possible with the latest technology and with as much support as possible. And that gets into a whole, different discussion of like how much people should be paying for metal, because, metal is the first thing that goes into a product, right? We're at the very bottom of the totem pole. So everybody wants that first input to be as cheap as possible, right? So if we can't price our metals, if it's a commodity that's priced in the global markets and everybody's pressuring it down as much as possible, it's difficult to expect the best in technology, the best in execution, the best in environmental care, right? If everybody's trying to crush down on the price that we sell at. So that's an interesting kind of ethical discussion that hasn't really been properly entertained yet. A little bit, though, it is coming up. Apple looking for ethical sources of metal, trying to recycle more metal.
Is there blood silver?
Not really. I mean, there's hard work silver that is not, artisanal miners at high elevations have it's a tough gig, right? There's better ways of doing it. That's why the commercial miners can come in and employ and help do it properly. But it wouldn't be like blood diamonds where you've got, that kind of conundrum in the very sourcing of it.
One thing, and another big takeaway, by the way, you look like you're 26 years old. You don't have to tell me how old you are. Maybe it's a screen. Let me make you a little bit bigger. No, I made you bigger and you look the same. What age range are you in? I guess we could just look it up because
early 40s, 42.
Early 40s. Okay.
Yeah.
I just want to tell you something about yourself for people who are seeing you and listening. Like Brendan is where you want. If you're listening to this and seeing him, this is where you want to be. Like I'm throwing emotional context. I'm interrupting him. I'm asking him tough questions. Is there blood silver, right? Are you destructive? You pay bribes, and he isn't flapped. But the biggest thing that I noticed about you, I'm throwing high context emotion at you, and you are remaining settled and poised. And you're not rising to the level of emotion that I'm having. You are communicating like the leader of a public company that is the shepherd of other people's dollars. It's a very sophisticated poise and presence that I don't see very often in companies. And it's some combination of your age, the pressure of running a public company, and just being a well sorted out individual. Likely, my guess is from having been in a lot of deals and getting taken advantage of or subsumed or having the deal fall apart or losing money and at real high stakes, and really getting in alignment with what works. But you're a sophisticated leader, CEO, and deal maker that comes through very prominently in the conversation.
Thank you. I'm not good at accepting compliments, but thank you.
Yeah, well, I'll try and insult you here in a bit.
But fire away. I think one of the things is really just trying nothing's personal, right? You never take offense at anything. And like, your ideas the more your ideas get challenged, the better refined they become, right? So I always like, come at me.
Well, that's excellent. And I think in your answers, they are, a lot of times we'll get answers to these questions when we're interviewing companies or we're looking to invest or assist, and they are out of the can. Like you feel like the question that we're asking is just getting put in a question category, and you're
Slotting
taking
it
out
in.
question. Oh, this is category A, question 3. You're taking out the pat answer, but it feels to me like you're digesting the question and answering in a place where you're trying to anchor to what I know and move me forward, not just throwing a media answer to the category. And I think a lot of people could learn from that skill set is really starting the answer at the point of confusion of the asker. And that also, I feel, is a very strong point from you.
Yeah. My wife's in communication, so I'm not very good at block and bridging.
Okay. And you've got a family, and where are you guys based out of, and what is your family look like?
Based out of Toronto, no kids, both kind of very involved in the mining industry. So it's been great. Like she's a wizard crisis communicator, works for some of the biggest mining companies in the world. So just tremendous ally in the business, I guess you could say. And,
but you don't work together?
No.
And do you think that is something that could ever be successful?
Yeah, I think so. Yeah.
You do? Wow.
Yeah. We're both stuck at home right now. Toronto's in a major lockdown since November. So I can hear her yelling down in the kitchen while I got the office for today.
I was telling a buddy of mine, my wife came in and we had to send a big payment off to the bank, a recapitalization, and it's due at the end of the month. I tell her, so I'm telling my friend the story, my wife comes in, I don't have any assistance or anything here because of COVID. And I tell her, hey, take this down to the post office and mail this the slowest way possible to the East Coast. And my buddy goes, she sent it overnight, next morning, priority delivery, right? I go, exactly.
No doubt. Yeah, exactly.
So it's different spouses for different careers. So let me see, returning to deal making, give me an example of a story if you can. I know it's hard because it's my industry too. Every example is a company and a person that doesn't really want their laundry, aired out on the Oren Klaff Dealmaker podcast. And so we end up talking in these abstract, guy and my friend and the deal, and it was, a lot of money. And is there anything that is far enough back that you can really take us inside a tough mining deal that you had to, come in and save? And what were the elements of the save?
Yeah, so I'd probably go back to kind of my early days in the industry itself, after I left law, so around 2008 or so. And I joined this company called Pelangio Mines, which had spun off a deposit called Detour Lake to Detour Gold in 2007. So I joined in 2008. And it was a really interesting thing because we had 20 million shares of Detour Gold, right? And the first transaction was done with Detour at a valuation of 350, so a $70 million deal. Right. But then that 20 million shares worth 70 million all of a sudden became worth 400, 600 million. Right. But we were trading at a 20% discount because we were, a hold code. There's a tax implication. So we were looking at ways to really unlock that value for our shareholders. And you had hedge funds investing in us instead of Detour Gold because they could play the arbitrage. So we ended up doing a butterfly swap transaction to separate the company into two. Put 1 million shares in our West African assets into one company, and then the 19 million shares remained in the company. We actually spun off this Pelangio exploration. And then it was about merging those 19 million shares back in with Detour Gold in 2009. Now, in the midst of all this, right, you've got the credit crisis, right? So, our stock was $5 in June. by September or October or November, it was 60 cents, right? And then trying to get back from that. And really, then it was a pretty hard negotiation to say like how this deal should be done and what the fair way of doing it. And yeah, like I have a book on it somewhere, the ins and outs and the personalities involved, right? But I think it was really the lesson of, what's best for the shareholders, what's best for the trade, right? How do you make the trade as efficient as possible?
Yeah.
And by doing this deal and like merging our holdco back in with Detour, Detour went from like $7 all the way up to $40 in the next 2 years. And like that was part of the story where I remember investing in Palangio. This company was when I was a law student in 2003 at 10 cents. And by 2011, the stock was worth $11.50, right? So, 11,500% return. I had a small part to play in that, but it was really the lesson of like, it's about the trade, right? It's not about the personalities. It's not about these like little wins. It's really about what does the trade look like and how does that make the most money for everybody involved. And I think that's partially the benefit of the industry that we're in, where we're not trying to grind people for pennies when you've got these big generational commodity trends happening around you.
I think, and the takeaway I have from this and what I see in deals is when we get into a tight spot, we disconnect it from what we want or what they want, and we make it about what the deal wants. So we anthropomorphize the deal.
Yeah.
Right. And say, this is what the company wants. This is what the deal wants. And then we can say the right thing to do for the deal is this thing. Right? This is the normal way to do it. This is, if it ever goes to court, the judge is going to say, why didn't you do it this way? When we go to our shareholders, we're going to show it to them for 3 minutes. And if it's right down the fairway, they're going to sign off on it. Our board of directors, it's going to be like poop through a goose, if that's even an expression. So you tell me, do you want to find some weird way to paper it that causes a lot of friction, lots of explanation, lots of frustration, lots of anxiety? Because, I'm not saying that deal can't be done. What I am saying is it's not the right thing to do for the company and for the deal. So when you make it the right thing to do for the company, and that's actually, you're anchoring it to norms, then I think it's a great way to push deals forward. Like this is in Harvard negotiations school, they would say, but my impression is like all the Harvard negotiation stuff, they try and paste it onto deal making, but it's really for the Israelis and the Palestinians to work out intractable differences about land borders, and Katyusha rockets. They're not really that type of negotiation, the best alternative to a negotiated agreement, what our side wants, what their side wants, a give and a take. I mean, I'm talking to you, and I'm asking authentically, a real deal maker who goes in mining, high stakes, tens and hundreds of millions of dollars at stake. Is that Harvard law school negotiation stuff pragmatic, or is it really about making a deal that everybody can live with and is fair?
Yeah, it's all about fairness and simplicity to the maximum amount possible, right? Like I studied tax law when I was in law school, which, I went into corporate law, but I still have a fascination with tax law. So I do have like an appreciation for the tax complexity, which can unlock a whole lot of value, but that drives the deal forward and can often be the crux of the deal, right? So you can leave the complexity there, but that's got to work again for both people, and it's obviously got to be above board as well. But it goes back to it's like buying carpets or shawls in a bazaar, right? It's just about keeping that trade, above board, but creating something that's better than what was before. And that's the way deals should always work. But that's in my industry. There are industries where they are a lot more cutthroat and zero-sum games. In mining, though, if it's not working for everybody, then it doesn't work for anyone.
Yeah, no, I mean, you're a real deal maker. I think in the large deals we've seen, one way to think about it is I don't know how mining is, but if you look at real estate transactions, you'll see a series of assets were sold for $170 million. $135 million, $140 million. Like, really? Why isn't it 141,285,330 and 92 cents? Like, those guys can do math. Those guys care about money. They have accountants and law firms, right? Because at some point, it just, has to become a fair deal at a number that everybody can live with.
Yeah. I think the interesting ones though when the other side is stressed. If you've got a distressed seller, like, how do you do a fair deal there, right? That's the tricky one, when you can really grind them down and they have no other options. But that's the same thing. You got to step inside their shoes and say, like, where is their breaking point? Like, where also, like, where will I break them? And then where will they hate me afterwards and speak badly about me and never do a deal with me again? Because people, they pick themselves up, and then you want to do, and they're like, I'm never doing a deal with you again, right? So there is always that respect, right? You can drive people, you can build respect by driving people right to the edge, but never over.
$1,000,000,000%. And at the risk of, you calling up Todd and going, I went on Oren's podcast and then he talked the whole time.
That's what you guys do.
Very early in the deal business, and this is the last thing, I'll be respectful of your time, but see if you can relate to this. I call my partner up and I go, I can get a 10% spread on this big trade. It's a $40 million trade. And I said, I can get we're asking for a 5.5%, 6% spread. I go, I know how to sell this. I figured out the pitch. I figured out the emotions and the pull. I have a big enough pipeline. I can get a 10% spread on the deal. Right. And Russell came in and he said, yeah, I know you can. You're smart. You figured it out, but don't be a pig.
Yeah.
Leave something on the table for the other people. We're going to get a reputation for that behavior, and no one's going to want to do business with us. I know you're going to get, the Ferrari you wanted or whatever. I know what you did, Oren. You built a spreadsheet and you go, it's 6%. That's my regular pay, but I can get a Ferrari 488 with the wheels, the carbon fiber wheels. And then you said, okay, with that goal in mind, where can I, and then you figured out a better pitch, and you worked really hard and you created this additional leverage. Except for, we don't need to be pigs. We're making a ton of money. Leave something on the table for everyone else.
Yeah. And it is it's something I often say to our team as well. Like, it's don't be greedy, right? Just don't be greedy. It sounds so simple, right? And there is that balance of doing what's right for your shareholders in the company. But when you're being greedy, right? When you're waiting too long to do the trade, you're waiting too long to raise the money, or you're just grinding somebody too hard, right? And it's, don't be greedy. It's especially in this industry. People just wait too long. They don't sell, or they're trying to get another penny so they don't buy, and they just end up missing the trade entirely. And that's just something we always got to fight against. So
will you get fatigued? So can somebody fatigue you and you just go, I'm out?
No, I think some people have wished I would.
Yeah.
Once you get in deal mode, you grind, right? And I'm not in deal mode right now, but it's a weird feeling, right? You don't need sleep. I don't need sleep a lot anyways, but you do not need sleep, and it's an amazing buzz, right? And I love it, right? But you gotta prep for it. You gotta have the deal that you can actually do that on, that makes it worthwhile, right? But I'll grind real hard.
And the last thing I want to say, I love you. You're a very nice person. I mean, I don't know you that well. You could be, I think what I'm hearing, which is really interesting, I grind, I put my boots on the ground, we work hard, I have to return capital for shareholders, we take risk, we're very focused on every dollar. And then on the other side, you're a very nice person that smiles and you're not sort of a grumpy grinder trying to get everything for himself and nothing for anybody else. And those two things can exist in the same person: grinding, working hard, wanting the best, taking care of the shareholders, putting yourself in pressure situations, doing large deals with high stakes. And at the same time, being a genuine, authentic, transparent, kind, fun to interact with person. And I think in our mind's eye, when we think of high stakes deal makers doing 50, 70 million, $100 million deals, we don't believe those two things. That's not an archetype that's in the movies or on TV. But hopefully a lot of people see this and see the real world, the characters you see. And maybe this is my last point. The characters you see in TV shows and movies were developed by 23-year-old writers who are writing about deal makers from basically the wellspring, which is The Godfather, right?
Yeah.
And extending those archetypes into media, but it's not really representative.
No. Well, I mean, sometimes you run across characters who are the caricature, and you're like, oh God, here we go, right? And maybe you get a deal done, maybe you don't, but seldom you do, or you just don't want to, right? It's not worth your while. But it is funny, like watching those shows, and like somebody will propose a trade, and you're like, that is the dumbest trade ever. Like that's stupid. That's not good advice. There's I think an HBO show that had something like that on recently. But
so, did you watch Billions?
I haven't watched Billions actually. I want to. So that's on deck.
So Billions, Succession, and Suits,
I
think, are sort of the closest thing to deal making, but on the other hand, not a perfect representation.
No, and there's Industry, which I think is coming out of the UK, like being like an investment banker, young investment banker coming up in London. Also, it's actually not too bad, I think. But
so it's called Industry.
Industry, yeah, I think it's on HBO.
Yeah. I'll have to see it.
Yeah,
all right,
we're checking out.
Well, I'm going to let you get back to the world, your work of finding these silver, these metals, bringing it to the market, doing it in a way that is ethical, helps industries that we need, to get in the next generation of technology. And I really appreciate you putting that in context and bringing a warm, charismatic, kind face to the mining industry, which most of us, think of quite differently. So thank you.
Yeah, I mean, lots of great people in the industry. That's what I've learned over the while. And it's because of the things we have to go through, the places we have to go, right? And it's a very collegial industry, an incredibly collegial. It should be more so, but it's pretty good because we're all working towards those same goals.
And it's funny because it's the opposite of tech. Tech is full of assholes, right? You don't have to go anywhere. Isn't it really that hard work? There's no risk, right? You're working in your computer. You don't need to be an asshole. And then mining, which has all these challenges, has these wonderful people in it.
Yeah.
Explain it to me.
But I think it's the, mining, like our inventions take millions of years to form, right? And I mean, if you find something, it's going to take minimum 5, probably 10, maybe 15 or 20 years to actually put into production, right? Into production. So I'm always fascinated by tech, where it's like I have good friends in tech, and it's a 3 or 6 month obsolete, and like that kind of, that's a you're fighting amongst velociraptors, right? Things are getting taken away right away, right? So I'm always blown away by how fast the tech industry can reinvent itself and tweak to make it better and better and better. So I kind of understand the immediacy of like, we need this deal now. You can't have this. We're luckier in the mining industry in that we can take our time, share ideas, because stealing, 1 million ounces of gold in the ground, it's pretty tough, right? So there is a big difference there. And that's the good thing about the industry, though.
Awesome. Well, thank you for sharing that part of your world with us. I really appreciate it. We've done what I set out to do with this, which is bring a real deal maker and look inside, get a window inside the world of high stakes, real deal making, and how nuanced and professionalized it is.
Thanks a lot, Oren. That was great fun. Really enjoyed it.
All right. We'll see you next time.
Thank you.
Hey, thanks for listening, and be sure to stay tuned for more great content from Oren Klaff.